I'm going to show you exactly how to retire off $196,000 to make $15,000 a month off 3 very special stocks that have been able to do this for me. Now let's take a look at my portfolio. As you can see, we have crossed 700K, currently trading at $712,000. And I plan on turning this into 10 million in the next 7 to 10 years. So if you want to follow along, make sure to be subscribed and hit that like button if you get value out of this video. Now, the 1 month change, we're up $53,000, which is 8% in a month, okay? So I've been able to do this based off the 3 stocks I'm about to share with you. So now before we get into it, if you want my free stocks and options plays directly in your inbox for free, click that first link in the description. And if you have any questions throughout the entire video, you can go ahead and comment them down below or message me on Instagram at It's Ryan Hildreth or my Facebook. Both of those links will be down below. So I love answering all questions on my Instagram and Facebook. Now, let's go ahead and dive into the compound interest calculator to kind of see exactly what our monthly interest target is, okay? So initial investment, $196,000, and our target is gonna be 5% monthly. Now, this is doable. I've been able to do anywhere from 4 to 7% a month consistently and passively. So as you can see, the compound frequency is monthly because we are making this every month. So our account balance is growing every month. And I'm just gonna put 1 year with no contributions, okay? So as you can see, the timetable right here, the first month we're gonna make $9,800, okay? Yes, we're not at our target of 15K, but by the end of year, actually by the 10th month, okay? So around October, if you were to start in January, you'd be hitting 15,000 a month. And then by the end of year in December, you'd be over $16,700 monthly. So you can see how monthly compounding works. Your account balance is going to be growing every single month. So therefore you're going to be making more monthly premium from your options. Okay. So this is exactly how to do it. Now let's dive into the strategy. Okay. So I utilize the wheel strategy. Now, I'm not gonna get into the nitty gritty of exactly what the wheel strategy is. There is a tutorial in the description, like if you've never heard of it, but basically it involves selling cash secured puts on stocks that we love, right? Great companies that definitely aren't gonna go out of business. They have high free cash flow, decent PE ratios, that kind of stuff. So we sell cash secured puts, collect premium, okay? We do this every single month. Eventually, the stock is gonna tank and go below, stocks pull back, and it's gonna go below our strike price. So we're gonna get assigned shares at that specific strike price that we sold, right? So once we get assigned shares, how are we gonna collect income? Well, we're gonna sell covered calls that are close to our cost basis, right? And not below our cost basis, but close to, so that we make a profit, a double profit. And we're gonna collect premium, right? And then eventually the stock is gonna recover. The stocks that I've traded have all recovered from every pullback 100% of the time, okay? So once the stock recovers, right, and it goes past your call strike, now your shares get called away at a profit. So you make the profit on the shares and you make the call premium profit. And then you do it all over again, okay? So sell puts until you get assigned, then sell covered calls on the shares until your shares get called away. And you keep doing this wheel strategy to collect monthly income. And this is exactly what I do, all right? This is how I've grown my portfolio from literally $2,000 all the way up to where it's at now. Now that's just one of my portfolios. We're well over $1 million in, but so that's how to do it. Now we're gonna divide our position into 3 stocks specifically, okay, for income, all right? So if you have more money, that's great. I'm not saying put all your money in these specific stocks or these specific options plays. I like to keep a diversification. So 196K is gonna be allocated towards the income position, which is what we're gonna do here, right? Anything additional, I'll put into safer, more diversified ETFs, SPY, QQQ, maybe some different safer stocks, right? So that's how to do it, okay? Number 2, we're gonna start the wheel strategy by selling 35 delta cash secured puts. And we're only gonna enter on a red day, ideally when the stock is at or below the middle Bollinger Band, and I'll show you on the charts exactly what that looks like. All right, and then we're gonna sell the 35 Delta cash secured put 30 days out to collect that monthly income. Then once we get assigned, we're gonna sell the 40 to 45 Delta covered calls. So we're gonna go really close to our cost basis, okay? Because what we wanna do is get rid of those shares as quickly as possible so that we could keep collecting income fast, right? And then always let the shares get called away. Don't roll any positions. So let's go ahead and jump into the charts and I'll show you exactly what I mean. All right, so here we are on TradingView. We're looking at Palantir Technologies. This is going to be the first company that has great premiums and they have tons of free cash flow and they just got inducted into the NASDAQ 100. So they are proven as a company to be profitable. They are proven as a company to be desired by a lot of investors. As you can see, this stock has gone way up very fast, okay? Now, it is building consolidation here. And as you can see, there's these bands, right? So what I want you to do is go to indicators and you're gonna type in Bollinger Bands. And you're gonna click on that and that's gonna pull up these bands. Now, what these bands represent are 2 standard deviations away from the average price. So these bands, the stock is gonna trade within these bands 95% of the time. And only 5% of the time it's going to pop out of the bands like you see right here. But what happens is the stock tends to revert back to the mean or revert back to the average price. So the stock tends to snap back inside those bands and trade closer to the middle band, okay? So as you can see, Palantir right here has we have broken out, breached out of this upper Bollinger Band and then kind of snap back inside, okay? So this is a decent place to sell some cash secured puts. Obviously not the most ideal. We would like to sell cash secured puts when the stock is trading by, at or below this middle band, okay? This middle line, this SMA 20 line. But this stock in particular doesn't tend to do that. This stock is very bullish. So any pullback we get on this stock, I sell cash secured puts and I've been doing it for the past year on this particular stock. Obviously, other stocks that I'm going to show you have been doing it for much longer, but this one has really good premiums. And in 2025, it's going to be a great stock, even in 2026 going forward. Okay. So what we're going to do is we're going to go to the account and I'm going to show you my current position. So on Palantir, you can see I'm running the wheel. I've never been assigned on shares on Palantir, never, because this stock just keeps going up. I've never been assigned. So I just keep selling cash secured puts. I have the 70s and the 67s, right? And, I recently got into some today. So I'm collecting my income here. And what we're going to do is we're going to go to the options chain. We're going to go to 31 days out, okay? 31 days out, that's to collect our monthly income. And we are going to go to the 35, ideally 35 Delta, but right now, since there isn't a 35 Delta, we're just gonna go to that 36 Delta strike price, which is $79, okay? If we go back to the chart, we could see $79 is below this support line, okay? So that's great. We're, selling a put below support. If it does breach support by expiration and goes below our strike, we'll be assigned the shares. But let's go ahead and calculate exactly how much we're going to collect, which is $365. But what is that on a percentage basis? So 365 divided by 79, because that's our strike price, okay? That's 4.6%. So almost 5%, getting close, okay? Getting close to 5% of our target, all right? If we wanted 5%, we'd probably have to go a little bit higher, but I would say just to be safe, stick with this 36 Delta and collect the 4.6%. When the stock pulls back, you'll be able to collect a higher percentage at even a lower Delta sometimes because there's more fear in the market. These are fear-based products, right? Options are fear-based products and we're selling them. So the more fear, the more expensive they are. So right now, there's not too much fear in Palantir. That's why we're only able to collect 4.6% versus sometimes we're able to collect on this same strike price, I don't know, 7% sometimes. So let's go ahead and move on to what happens if we get assigned the shares, okay? Let's say we get assigned at 79, right? Maybe the stock is trading down at 77. What we're gonna do is we're gonna sell the anywhere from 40 to 45 delta call, okay? So if we got assigned at 79, most likely the 45 delta would be like the 81 or maybe even the 83. So as we can see right here, right, the 45 delta would be right here at $4.15 at the 86 strike. So let's do the math on that. Let's just say we bought the shares today for 82 bucks, right? We sold a covered call at the 85 strike, okay? Let's do the math. 455 divided by 82. That's going to be a 5.5% return, okay? So we're actually going to make more on the covered calls because we're going closer to our stock, right? We're going closer to our cost basis. We would never sell a covered call below where we got assigned, because if your shares get called away, they'll get called away at a loss. But here, let's just say, we bought them at 82 and the stock went up to 86, we'd have to sell at 85. So we would actually collect a profit on our shares plus the call premium. So we collect 5.5% call premium. So let's do the math. 3 divided by 82 is about 0.03 times 100. Right, that's about a 3.6% return on top of our 5.5% return, right, which is a 9% return. So we're getting a 9% return on the covered call side. This is how we average out 5% monthly, okay? We want to get assigned on those shares and then quickly sell a covered call that's close to our cost basis to get the shares called away, so we get a profit on the shares and a profit on the call premium. So Palantir is going to be a great stock to trade for monthly income. So let's go ahead and move on to the next stock, which is going to be Tesla, okay? Tesla is one of my favorite new stocks that I've been running the wheel on. I've been very profitable on it, and it's very easy because this stock is just insane, has insane volatility, so the options are very rich in premium. There's a lot of fear in the options, okay? So as you can see, we are trading above this middle Bollinger Band line. Not the most ideal place to get in, but we're not trading at all-time highs, so that's okay. Let's just say we wanted to start the wheel here on this stock. What we'd do is we'd go into the platform, we go to Tesla, 31 days out, right? And we'll go down to the 30, let's just go to the 36 delta, okay? Let's do the math on this. We're gonna collect $25 or $2,540 for selling the 445 put option on Tesla. All right, so let's do the math. 2540 divided by 445. That is a 5.7% return, okay? So that's actually more than what we're shooting for, right? So on Tesla specifically, because it is a more volatile stock, you can go a little bit further out to be safer, right? Let's just see where it's trading. The 445s would be, it'd be all the way up here, right? So that's a little bit more risky. So let's see how far we can go down and still collect 5%, all right? So let's do the math there. All right, let's see if we could go to the 30 delta. So we're gonna do 1920 divided by 430. And that is about a 4.46% return, which that might be a better play because it's a little bit safer. It's a little bit further away from the stock, right? You're at the 430 strike versus the 445. We're currently trading at 465. So you'd get a better discount on the shares, right? And then you can make more money on the covered call side, all right? So let's just do the 430s, collect our 4.5%, right? And then let's just say we get assigned, the stock goes, all the way down past 430, which is right here. Maybe it goes down to 415, right? Worst case scenario, it hits this support level again. Okay, what we're gonna do is now we're gonna sell some covered calls at the let's just say 45 delta to be safe. All right, that's pretty close to our cost basis. Let's do the math on that. So we're going to sell the 485s for $27. So 2,700 divided by, okay, let's just say we bought the shares today, 465. So that's a 5.8% return on the covered call premium. Now, again, our shares are going to get called away. So let's just say we bought today at 465. The stock went up to 490. We have to sell at 485. Okay, that's 20 points away. So 20 divided by 465 times 100 is 4.3% plus, what was it, 5.7? So that's a 10% return on the covered call side, okay? So that's exactly why I would incorporate Tesla into the strategy, because the premiums on Tesla are even more than Palantir. So this is going to be I would say the riskiest play, just because Tesla is the most volatile. Now, the last stock we're going to talk about is one of my favorites because it gives you a good mix of very volatile, but it's also one of the largest, the second largest company on the stock market, right, according to market capitalization. And they have the largest profit margins out of any company that I trade. So this company is NVDA, all right, so NVDA. And we could take a look at the chart. I'm very heavy on NVIDIA. I have over $175,000 position. And when NVIDIA tanked right here, I was selling a lot of cash secured puts, and I was even buying call options, which I typically don't do because they don't produce income, like short-term income, but I did. So right now would be a decent place to get in. I think, we're not even close to all-time highs. We're at 152 is the all-time high. We're currently trading at 140. So what I would do on NVIDIA, and the premiums are very rich here, is go 31 days out, right? Let's just go 36 delta because there is no 35. So the 136 strike, if we go to NVIDIA, that's right here. So that's right in the middle of these two support lines. So that's great. I would love to get assigned the shares there. I don't mind it. So let's do the math. We're going to collect 415 bucks on the 136. So 415 divided by 136 equals 3%, okay? So the premiums are gonna be a little bit less in NVIDIA because it's more of a established stock, but they're still pretty high, okay? They're still pretty high, and I've seen them even higher when the stock tanks. So like when it pulled back the other day, when it came down here, I was collecting 4% premiums at the 35 delta on my cash secured puts. But again, that just depends on if the stock is trading at the top of the Bollinger Band or closer to the bottom. The closer to the bottom it is, the more premium there's going to be because there's more fear in the puts. So let's just say we got assigned, right? We collected our call premium maybe for 3 months straight, which has happened to me. And then eventually NVIDIA tanks and it goes below our 136 strike, okay? So we're just going to pretend like we bought the shares today and sold the covered call and do the math on that. All right, so the 45 delta is going to be 144, the 144 strike. Just make sure always sell a covered call above your cost basis. So if you got assigned at 136, you would never sell anything below 136 covered call. You would have to sell 136 or higher. Okay, so let's just do the math. 45 delta, we're collecting $485 divided by the current share price right now is 140. Okay, so that's a 3.46% return on that side. But again, we collected also the profit on the shares, which is $5 divided by 140 equals times 100. All right, so that's 3.5% plus 3.5 on the call premium. Right, so that's a 7% return on the call side. So again, the call side, you're gonna make more premium. You're gonna make higher returns, anywhere from 7 up to 10%, which is going to average out your monthly percentage somewhere around 5 to 6%, okay? So that's what we're shooting for. If you enjoyed this video and you want to see another tutorial on this, I have a long tutorial right here. Check this one out, and I will see you in the next video. Take care.